In this video, I'll talk about the top 5 best stocks to invest in. And no, I'm not going to give you individual company names. I'm going to give you business models. If you're new to investing and need a little help narrowing your search, this video will help you with exactly that. This will not only help investors, but if you're looking for your next billion-dollar idea, if you're an entrepreneur, this will give you a few ideas on what type of business model to create on your own. Now, keep in mind, these are high-flying business models that can make a lot of money. On the flip side of that equation, when the market falls, these stocks can drop fast. But as we learned from Warren Buffett, rule 1 investing, rule 1, don't lose money. And rule 2, don't forget rule 1. What that means is when your stocks go down, you do not sell for a loss. You wait for the market to lift everything back up. That's when you sell for a profit. So anyway, these are high-flying businesses that can make a lot of money, but at the same time, they can also fall fast. Before we get started, if you like videos on investing and finance, please hit that like button. If you want to see more videos like it, please hit that subscribe button. Here at Ticker, we're all about clear, confidence investing. Now, this video will focus on the top 5 best. The next video will focus on the top 5 worst. So how do I know a lot of this information? Well, I've been building businesses for about 20 years. I've probably analyzed over 1,000 businesses, and I've worked for publicly traded companies for over a decade. So being on the inside and being in revenue generating positions, I kind of know the good, the bad, and ugly, and what types of businesses to invest in and what types of businesses to avoid. Okay, let's get into it. We're gonna go in reverse order starting at number 5. Number 5 would be chips, semiconductor chips. So anybody in that space that's manufacturing chips or helping with the manufacturing process, that's a highly scalable and in-demand business model. Examples would be, and I'm going to give a lot of examples here. These are not stock recommendations. I do recommend you go to Ticker to double check. These just will give you a point of reference to get you thinking about, okay, so I know what that company does. That's the business model I'm talking about. So some examples in this case with chips would be NVIDIA, AMD, Intel. A company that doesn't manufacture the chips but helps with that process would be Nova. But overall, chips are in everything: computers, cell phones, TVs, microwaves, refrigerators, even cars. In order for electronics to run, you need chips, and chips are not going away. So that's why chips are at number 5. Number 4 would be SMB SaaS. So SMB stands for small and mid-sized business, and SaaS is software as a service, reoccurring revenue model. Typically with SMB SaaS, your price point falls between $30 and $300 a month. You can, in some cases, see SMB SaaS go to 4 figures per year, but typically it doesn't go much higher than that. Then you break into enterprise SaaS. We'll get to that in a minute. But with SMB SaaS, some examples would be Intuit. Think about like TurboTax or QuickBooks. There's also Toast, which is a SaaS for restaurants. And then there's Monday.com. So typically those price points, again, can be $30 to $300 per month. Of course, it can go a bit higher, but not too much higher. This leads to number 3, which would be enterprise SaaS. So enterprise SaaS, your contracts are big. They can be 5, 6, or 7 figures per year, and the contract lengths can be 3, 5, 7, sometimes 10 years or longer. Very sticky. It gives an opportunity for the SaaS provider to create expansion revenue. What that means is they're charging a fee. Let's say in year 1, they add more services to the value, and then they charge more in year 2, year 3, and that number keeps going up. Examples of enterprise SaaS would be like Microsoft. Think about Dynamics 365. There's also Azure. Of course, all the Microsoft Office licenses. Every large company, or I should say most large companies out there, everybody's using PowerPoint, Outlook, Excel. That's a license per employee. And when you have a company with 10,000 or 100,000 employees, that dollar amount racks up really fast. So that's a good example. Palantir, enterprise data analytics. There's also Salesforce. There's also Fortinet, cybersecurity. Those are all great examples of enterprise SaaS. I know in some cases, like Salesforce could serve a SMB, a small, mid-sized operation, but in most cases where they make a lot of their money, it's the big businesses on an enterprise SaaS. All right, number 2 would be FinTech. FinTech is a business model that a lot of, if you're in the entrepreneurial space, they prefer FinTech where you have transaction fees as opposed to SaaS. SaaS, you typically have a set fee per month, and sure, that's scalable, but FinTech is another animal. That's when you come between the buyer and the seller, and that buyer and seller, they could do 10 transactions a month, they could do 100, they could do 1,000, and the meter keeps running. Those dollar numbers keep going up. That's why fintech can be very scalable. Examples would be like credit card companies, PayPal, SoFi, the list goes on. Now with fintech, when times are good, yeah, times are really good. But when the going gets tough, as Billy Ocean would say, the tough gets going and they can fall like a rock. I know this. I invested in PayPal. PayPal is still in the red for me. But when things really take off, that one can go like a rocket. So do keep that in mind. Fintech is probably on the riskier side of everything I'm listing here. But when they start flying, that flywheel really gets moving. The revenues and the profits can go through the roof, which means share prices can follow right after. And this leads to number one, top of the food chain would be ad tech. So when you have a business that's so big that you can create advertising and not just have banner ads, but you empower your customer to add their credit card and they control the ad spend, the sky is the limit. When you have a business, for example, that's putting in $1 and they're making $2, I've seen and I've been part of projects that ad spend has gone from $100,000 per month up to $200, up to $300, up to $400, and it just keeps going because the business realizes that we're making money with every dollar we put in. We're getting $2 back. Let that meter run. And when you have thousands of businesses out there doing the same thing, that's why ad tech is the top of the food chain. Examples in this space would be Google, Facebook, and Amazon. Now, when times get tough, kind of like with fintech, businesses do pull back on ad spend, which means share prices in this case can fall. We saw that in 2008 with the Great Recession. We also saw that in 2022, the recent recession we went through. But when we come out of a recession, these businesses need to make up for lost time, which means their ad spend pretty much doubles. And that's when businesses like I listed, like Google, Facebook, Amazon, and the list goes on, they will see really nice returns. Now, of the 5 different categories, I do have to say this, the ones that'll probably get hit the hardest when markets pull back will be fintech and ad tech, but those are the highly scalable businesses that can fly like a rocket. Again, none of the stocks I mentioned in this video are financial advice. Do check ticker, double check, make sure it's a strong stock, but this should help narrow your search if you're looking for some strong, high-flying businesses that can really make some bigger returns. If you're looking for clear, confident investing, I invite you to join Ticker for free. If you want free training, you can go down to the show notes. There is a webinar titled The 3-Step Investing Plan to Buy Stocks with Confidence. Thanks for checking out this video. I hope to see you in the next one. All right, bye for now.